Good morning. This is Ron Janish, and this video is about profits in wild markets. A little bit of advertising. First, if you want to know more about this kind of stuff, just come on over to andrewscourse.com. And one of the things you can do is you can click on New and join the email group. And you can also, which is even better, get the Advanced Andrews course where you learn how to do this stuff. Now, back to what it is that we are doing here. We are looking at how to attain high profits in wild markets, or at least survive in wild markets, right? And so if you understand how to survive in wild markets, you've got a pretty decent shot in making decent profits. Basically, there are some markets where when they're going to really tear, what happens, all we really do is draw a is simply draw a trend line, okay, and then we draw kind of like a median line. I use quote.com for this, and it's not real fancy. Just is all I really did was I just simply drew a trend line, and then I take this here as my action point and this here as my reaction point, and then I just kind of copy and paste these things below here. Quote.com and eSignal does not have an automatic feature for this, but it is the only software that I've seen that actually lets me do this real easily. So anyway, this is what I call the Babson profit ladder. It is using the action-reaction principle. The only thing is the lines are always equidistant. Now, all we did was on this day here, we drew and sent out one of these rare emails. This doesn't happen very often. We say, okay, it's time to use the Babson profit ladder. And one of the advantages of using the Babson profit ladder is that you can have reasonable support and resistance levels you can know in advance. So, for example, when they came down here and then busted through, there was a really good probability they were on their way to the next line real quick. And if they would bust through this one here, they would try this one here. Except sometimes. And what they do sometimes is they will stop in the middle here somewhere and go back up to this line. This keeps happening to me. And go back up to this line and then use this line for resistance and then go down some more. Okay. Now, when they do that, then there's an opportunity to enter the market at a reasonably tight risk and take the ride down some more. Now, in order to do this, you have to, first of all, know what your downside target is. In this case, it's somewhere around 1530, and we can see here we're at 1610, and got a long way to go to the downside target, right? So that's fine. Let's see what else we have here. I'll give you some rules with this. And so here we can see what happened afterwards. This is several days later. I posted this chart today, and we can see that prices busted through, came back up, but didn't really go up to the line, right? So you could have sold here, but your risk is I don't know, whatever it is, going beyond this line. And here's the other part of the fancy part of the risk is when it goes up and breaks this line. Yeah, you probably want to get out. The thing is this is it may not do it till way up here. That's the scary part. But as you can see here, prices went down, went up to the line, and boom. Okay, so they went down and they formed support here and just spent the whole time. And these are hourly charts. So it spent a whole lot of time going back up here. Finally hit that line where a lot of my very, very smart students are selling and going to be taking that ride down some more. Okay. So that's really what it is. Let's take a look and see what it is I wrote up on the rules. See, you use them only when it's called for, and the Babson profit ladder is not something that's used all the time. It's used only in very specific situations. Now, to make it easier for you, one of the things that I do is I'll post charts where it's appropriate. So to, and then you can also look through the material, and in the course manual you'll see that. And you need to know in advance what your downside target is. In this case here, like I said, it's about the 1530 area at this time point, and as you can see, we still have some room to go. You really, now, do you get out at the 1530? You might. It really depends on a number of other factors. Just understand that when you use the profit ladder, you really need to have a much lower, in this case when we're going down, because it also works for going up, you really need to have a much lower target. Okay, so in other words, you want to make this worthwhile. So if you're selling up here, your risk is that it may go up to here or something like that, and then pop on through. And so in order to make that risk pay for itself, so to speak, you need to have a good distance to the downside here to be able to profit from, right? Okay, so know in advance what your downside target is. Go only with the trend, right? And when prices, and in this case the trend is foretold by knowing when to use it and stuff like that. That's easy. Okay, and even though in this case here we're going against the much longer uptrend, okay, there is a downtrend in progress right now. Okay, when prices come up in the downtrend here that we have here, okay, that's where we wind up having a sell point, right? And the risk is them spending time above that line, that whatever line they hit or came very close to. And of course, you want to take profits, at least some, when prices get to the downside profit area. And watch that downside profit target area, because you could get really strong support there. Okay, and or when they go through several lines to the downside. So for example, when prices went up here, and let's say you sold up here, you go through one line and then goes down to the second one, you can take profits here and take a chance to see if prices go up and give you another selling opportunity, which in this case they did. Okay, so let's see what's going on at this very moment, and we can see that prices drop through here. Okay, and so I just keep on what I do is I do kind of a copy paste thing. See, so I'll take this, let's say I'll take this line here, just clone it and put it on there. Okay, and as far as I know, Interactive Data, which owns Q Charts and eSignal, are really the only charting service that you can use that does all this fun kind of stuff. So accurately anyway, or close to accurately. I mean, you can use my Precision Trader software, and of course that does it. That's a no-brainer. And that does it much better, and you don't have to do this Mickey Mouse stuff. But Q Charts and eSignal gives you the flexibility to do that. Why am I making this plug for those guys? Jeepers. Let's take a look. One of the reasons is because they're generous enough to let us do whatever we do with our charts, and what they will do is they will give you a deal. What you do is you call up and ask for Scott Fitzgerald. Now, he's a sales rep, and you can get him at 1-800-322-0940. If you mention Andrew's course, you will get pricing that is at least $25 off the regular monthly service thing that you would get on the web. I'm saying at least. It depends on a number of factors, including what brokerage firm you use, because if you use firms like Interactive Brokers, then you can get hundreds of dollars worth of discounts, depending on what other things you get. If you get CME and CBE and whatever those, the different boards of trade status. So you can get a whole lot of discounts, and depending on what brokerage firm you use, not how much you trade, but what brokerage firm you use. And there's several of them that give you that deal, but you got to call Scott Fitzgerald at 1-800-322-0940 and mention Andrew's course, and you get the special pricing. And ask him how to get that, get the discounts on the different things, like having IB as a broker. That's the example. Okay. And by the way, I use IB. They are not telling me to do this commercial, but I can tell you that their pricing is very reasonable. So anyway, I thank you for your time, and get a chance, take the Andrews course and learn how to do this stuff yourself. Thanks. Bye.